less than 0.05% of companies get VC funding. That means that 99.95% don't. So how do you get investment from the VC? How do you get noticed by them? Stay tuned, because today we're speaking to a special guest who helps companies get VC funding every week. Let's go. Okay, so we already established that it's almost impossible to get VC funding. But what if there was somebody who lives between the funders and the VCs, someone who knows what actually investors are looking for? And that's where the venture scouts come in.
Yeah, so today we're talking to Ritika Mehta, a New York-based go-to-market strategist and advisor to venture-backed startups. She was a founding member of an early-stage community platform and later CMO of a B2B career tech startup. Now she's partnering with pre-seed and Series A founders, connecting them with VCs, investing in meaningful solutions with real-world impact.
Awesome. Well, Ritika, welcome to Building Great Tech, and thanks so much for joining us from New York. How are you today?
Amazing. First of all, thanks for having me. And finally, we got to connect this close. So I'm really, really happy and excited for our entire conversation.
Awesome. Well, we have some great questions for you today, and I'm sure listeners will get great knowledge from listening to what you have to say. So just really quickly, before we kind of dig into main questions that we have for you, just for our listeners, can you explain a little bit what actually the Venture Scout is? What does it entail?
So Venture Scouts are actually, it's like if you want to enter into venture capital or you don't have a network in VC, you will actually source startups to the venture capitals so that you learn about how to get the right deals or get the right startups and build a relationship with venture capitals and eventually build a ladder and a career into VC space.
Right. So you kind of like a connector between the founders and the VCs, and you kind of help them adjust and sort of being more ready for the VC funding. Is that right?
Not like VC ready, but more like, VC needs. They are always looking for great startups to invest in. As much as our founders are looking for VCs are looking for them. They're always on a hunt. And they have like a different type of way to look for the startups. So they either go for communities. They have like this apply form on their page, which you can go through. Usually there are less response on that site. It's, on an average, every year, pre-seed fund gets like around 1,000 applications, and they invest like 30 or 40 startups a year. So they want to have like really good sources and really good startups to invest in. One of the best way they do is with their own communities or having venture scouts. Venture scouts go and connect with founders, they talk, they see like what industry they are in, does that kind of startup fit to a particular VC or not, and then they connect startups to venture capitals. And this is the way the chain actually works in between.
Very, very interesting. And so how, you say you close with your VC, quite close. Do you guys have meetings, weekly meetings or monthly meetings? Do you kind of discuss what kind of companies you're looking for in this quarter? How does it normally look from your relationship with the VC?
So look, every day I am always looking for startups. So from that point of view, I'm hunting down on companies that are looking for funding. And on the same side, I connect with few investors. Maybe from my past experience also, and from past investors that I have myself talked to when I was raising funding for my own company, I build that kind of relationship. So I know that in which sector they invest in. And currently I'm working with very few pre-seed funds. It's not like a contract base or something like that. It's more like I had just said to them that, okay, I I source startups to venture capitals. So if you want us to work together, I can do that for you. So I became a venture scout, or on the other hand, sometimes you can call that as a venture partner. But then that becomes a very specific role in VC. So I spend most of my morning or days in talking to the founders or sourcing them, and then I see which startup would be fit for 4 or 5 VCs that I'm connected with, and then I just send it to them.
That's really fascinating. And so you said you are connected with one focused on pre-seed, and then I was interested to know, like, are they focused in particular sectors, or is that like really broad, and they're just open to really early stage startups?
So I didn't actually look for any particular VC. I thought I would start and create my own thesis, and I want to figure out which industry, which sector I want to focus on for the long term basis. So it's a very vast area. VC is a very big industry, and you have to start from somewhere you have prior experience in. So I have a prior experience in early stage companies. I've worked with them. I've closely dealt with them. I've built something, so it's easy for me to like connect and understand from the founder's point of view, and sometimes from investors' point of view. So I looked for VCs that are in pre-seeds, not in the Series A or Series B. There are particular different reasons why, but mainly like the funds are very huge. Getting into those kind of funds can get a little difficult if you don't have a network or connections prior. So I decided, like, okay, let's just see which VCs invest in pre-seed or seed rounds. I can easily connect and build something there.
Okay.
Fascinating. So I would love to hear from you, like, what does the VC market look like now? Like, what's going on right now? Because there's like lots of changes. AI obviously is super exciting and lots of things going on. But like from your perspective, because you're part of that like world, what is going on?
Oh my God, that's a huge thing. Actually, every day every morning I spend like reading so many newsletters, because any information you get about VCs and investment is like, I feel like it's very less. So I have to dig more into it. And, and definitely there's a very huge bump in investing sector, especially from like 2022, there is like steep cut in how many funds are being created. There has been like 63% less funds this year than last year. You can imagine, like, there are less funds, there are less liquidity, and there are companies that are raising rounds every now and then. So the funding is not like stopped. It's just it has changed its priorities to definitely into AI sector and healthcare and deep tech. So these are like the prominent, you will see always investors investing in. But I mean, I also saw this thing that read somewhere that there was like 48% of venture capital globally got invested in quarter 3 only in AI sector.
Ooh.
It was like this much amount of money. So you can just imagine like how much is going into venture capital. AI, but it's not in the very early stage. Like, you have to definitely show some sort of proof that your AI is generating some sort of traction, because there's every day you can see it's so easy to build that anyone can ask for raise, like they want to raise funding, but it's not possible to get funded. So majority of the capital is going into either big tech or mega tech, or in the mid level where there's a proof of traction and proof of like, okay, this company can actually grow and you can actually see an exit or an IPO in the future.
Makes sense. Okay. And what would you say, like, because like lots of different funders have different approach how they want to get funding, and what would you say is kind of like benefit to go with VC rather than other sources from your experience?
Still, bootstrap is I would say, if you can bootstrap as far as you can, go for it.
Yeah.
Because once a VC gets involved, it's not at all your own company. It can be a nightmare also, and it can be, it's everyone likes seeing the funding coming in, but they don't see the side of it that if once a VC funding comes in, you are no longer about easily and happily building your product and having like those nights when you can just like, okay, I want to build right now or I want to sleep right now. It doesn't work. You have to prove, and then that's how it actually works. That's how it goes. So
That's so interesting and really honest of you. Thanks for that. I was thinking you was like, what is like, because actually getting VC at pre-seed, that's quite early on, isn't it? Is it sort of normally VC you would get like much later down the line? And do I understand that correctly, or am I totally wrong?
yeah, no, actually, that's all seed of there's so many. I see it this way, that my perspective is like, a company doesn't, like a market doesn't get shape at the later stage, but it actually gets shaped when a VC funding goes into an early stage startups, because you never know if the sector is going to prosper in the future. Like we never invested years back in AI. It only got bigger if a small company wouldn't get invested in early stage, they wouldn't be able to shape that in the future round.
Hey guys, we're really hoping that you're enjoying this episode so far. And if you are, please like, subscribe, and follow. And if you really want to know more about who we are and what we do, go to buildinggreattech.com. Now let's go back to the episode.
That is fascinating. That is so interesting. So you're almost saying that the market is being shaped a bit by where the money's coming from, the VCs.
Where the money is investing, I would say in early stage. If you see there's a huge funding going on in the early stage sector, then you can see the next round or next kind of bigger investment will go into that same industry, and this cycle will keep going on. We cannot predict like what kind of investment is going on in the higher range, like series B, C, or D. It's more like in the early stage factors, I would say.
Fascinating.
So it's like self-fulfilling prophecy almost, like because you got last funding round was in this space, then the next one is more like, okay, interesting.
Yeah, that's really
Because there's so many funding goes into a smaller sector, and you can actually see if this company is going to work or not. If they are able to raise for the next round for like Series A, I would say like more than 80% of the companies just get shut down after receiving their early stage funding, like pre-seed, and there's only very limited number of them goes into Series A. So you can just imagine like which sector is actually working, where they're going to get more funding. So that is how it can shape. Like this is what I see. So that's why I like investing or like discussing more into early stage startups, like what they are trying to build and what direction they're getting into.
And what's your take at the minute? Was that those three sectors? So you said AI, healthcare. Did you say deep tech?
Yeah, deep tech.
I think you had a really good post on that, Ritika, right? Recently on LinkedIn on that.
Yeah.
And sorry, and I think you also said there was a B2B, SaaS B2B still doing really well, and something else I don't remember, but yeah.
Okay.
There's like a lot of like AI sector. Before it was like a B2C, it was like more consumer. They were consuming data from the customers. Now they want to go into the B2B sector and enterprise sector. So that is like they're getting a lot of because they want to build infrastructure on how things are working in healthcare or like logistic things like that. But for me, I would say what I'm really interested in right now is definitely AI, but not in a very all time basis. I just started looking for companies that are in logistic, but logistic has a very steep or like almost like there's a kind of like a stop in funding there because of the tariffs and economy and all sort of things. But they're very for me, I found that sector interesting, and I also like sustainability. These two are like getting me very interested into like what companies are building in these sectors. But yeah, there's like healthcare. I have zero. I also believe this thing that if you don't have immense knowledge in or expertise in particular sector, uh, how would you predict what can happen? How would you see if this kind of company is going to work or not? So I stay away from like health tech. I do like reading about deep tech, but I'm not an expert person into that, so I keep myself a little bit just to till the reading person.
That. I
And
love that. I was going to say logistics is fascinating because of like the real world scenarios, fleets, and there's just a lot of complexity in that. So yeah, I'm sure there's like lots of space for growth in that.
no, because you mentioned briefly on once you get the funding from VC, it's not so much your company anymore. But I wanted to ask you, kind of beyond the money, does VC support, like, does it add anything else to a startup? Is there any kind of support, guidance and things like that, or is it just kind of like here's the money and perform on certain level?
I don't think so that there are like venture capitals that just give you the money and then they just vanish. I don't think so. That I haven't seen any venture capital do that way. Honestly, they want to make sure that your company is running. They want to have their 5x or 10x return. So what they do is they have like portfolio managers or like someone like expertised in certain sectors. Like they will connect you with salesperson, or they will connect you with marketers or engineers if you need something like that. So they always have those kind of resources. They have like this team always, and there's a thing called venture studio, and they specifically specialize in working with the team. They fund and they simultaneously provide them resources to keep going on where you lack, so you can just like work with them too. So they just don't give you the money and then think like, okay, you work on your own. So I don't think so that there will be any, and there should never be any, because you have to have your money back, and you have to make sure that a company is working. They need everything that they need is provided if possible.
Yeah, makes sense. And going with their like trusted team of experts, like specialists in each areas, right, that push the company, take it like onto the next level from where it's come, and just
Yeah.
nurture and like, yeah, really nurture that investment, I guess.
Yeah, and I recently came across this role, which is like residence in something like residence founder or something like that. I don't remember particularly, but they are like CTOs, CMOs, or CPOs. They all are like that, and they literally join a company in the fund invests in, and they help that company grow. So you can imagine like how much they are providing along with the resources.
So is that those CMO or whatever in residence, would they be pulled in by VC? Well, in agreement with the company that they put money in, or is it like more pushed into that company that they have to kind of work with that person? How does it work?
I'm not that sure, because I would love to take that route. I haven't, clearly, uh, you know, plain the plan till now. But what I assume is if the company needs extra resources, then they have these people, and they will like connect you with the CMOs or CTOs, and they will like, okay, for contract basis, they will work until maybe you find your own substitute or like a permanent person. I think that would be the way it would work. But again, I'm not expert in that. I would love to work that way, because it's just because I can do like the GTM and I can also do the investment thing.
Cool. Yeah. Well, let's say I was a founder of a startup and I really wanted to get VC funding. How can I do it through you? Like, what would be the first step I need to do? What I need to do?
Okay, so I first of all go through the pitch deck, and honestly, I don't see any perfect pitch deck till now. And yesterday only, I was talking to another investor, and I was like, "How do I make sure that the pitch you get is perfect, or like you don't just throw it out, or how do I know that this pitch deck is perfect for you? And they say like you cannot assume anything based completely on a pitch, because the majority of the founders don't know how to create it. So half of the time, if we throw away those pitch decks and assume that they are not fit because they don't align with what we are expecting, then they might miss an opportunity. So I don't try to like just end things if I see a pitch deck and it doesn't fit any of my knowledge or criteria. I will still get on a call with the founder. Try to make sure that I can get more information, like okay, valuation, because which is insane. I would like I have no idea. I mean, like I can talk about this valuation thing for so long. This insane amount of high valuation and high raise asking. They're asking for high amount, but the traction is almost nowhere or nothing. So that's like a big red flag, I would say. There is that the gap is so big. So when we talk to founder, this will be the first thing to understand how much, why they're raising, how much they're raising, and all sort of things. Plus, I would like to know about the founder. Are they expertise in their field or not? There's very less chances where a founder is not expert in its field and they are thriving and building a really good product. So you have to be like a good person in building whatever you are building. You have to have like expertise in it. And then I like do a little bit more of due diligence on the traction side, how it is performing and not. And then when I see that industry, which industry it is, I kind of like assign it to, or like give it to a particular investor. Like then they jump on a call with them if they are interested. They from there move forward with that. For me, it's like I just look at the pitch deck, connect with the founder, talk with them, just like to get to know them and what they're asking, what their industry is, what they're trying to build, a little bit more information. And then I feel like if it's good, if they can have a chance of, entire part of my job is what I believe is to understand whether this company can be funded or not, which is kind of tricky. And on the same time, it can give a lot of information about the product and the company. And that's what investors are actually looking for also, that they kind of reduce a little bit of their work. You can just do a little bit of research on your own, and then they go, that this company is what we want to talk to. So yeah, this is like a small part of what I go every day to talk to a founder and then source it to the investor.
That's like a lot of work. You're like a detective.
I have like an entire Notion page, and I go through systems. Like I have like an entire build system for almost everything I work in. So now it's like getting easier. Before it was like everywhere. I had to like emails or Slack group or whatnot. Like LinkedIn also started getting me some sort of reach out. So yeah, it's just crazy, but yeah, it's fun.
I'd love to drill in. Like you said, some really cool things, like really interesting things there. I'd love to drill into a little bit in the traction bit. It's like just interesting that you're saying, yeah, they're asking for real high valuations, like for funding, but then there's zero traction. That performance piece. What is it specifically that kind of determines traction? Like signups. Is it retention, people hanging around? What is it that you're looking at in there? Is there a sort of suite of metrics or one key thing?
Yeah, it's not just one key thing, but there's just so many things to determine based on what the company is. So suppose it's like a subscription-based company, then there's absolutely no chance to look if there's no MRR, like monthly recurring revenue. If there's nothing like that, then I feel like they need to do a little bit more. They should like push towards into bootstrapping rather than asking for funding. So definitely there's like a high valuation even when you don't have a good traction. Traction is not simply based on like if you have like 1,000 subscribers or like signups that which is free, then and you don't have any paid in a subscription based business model, then how would you determine that those customers, that those signups are really building your company and they are like powerful to like transform it? So if you don't have that, then why are you even asking for such a big valuation, or $1 million at a very high valuation? So I don't think so that works. It has to be few sort of monthly revenue coming out, or it can be like, if it's like a contract base, then you can also show that there is 1 year long contract, or like 2 year long contract, which is like signed, but it's yet to be paid, or like it will be paid in a monthly basis. So it has to be some sort of revenue format. If it's not, then it's very likely that the investor will overlook it, or let's just like let it go for now. And it's definitely not number of free signups or likes or how much hype you're getting on the social media, because that's it can be very tricky. Like a month you get a good press, and you get like around 8,000 views, but it doesn't convert. And also one more thing, this side of the traction, then there's another side, is like how much churn is there, how much burn is there every month. If it's also high and you don't have any revenue coming in, then again that raises a lot of questions around what you're building. Either it is actually needed or not. If the customers are not needing the product right now, they will not need it tomorrow.
Yeah.
It's something like that also.
It's like it's a key indicator. Like, is someone willing to hand over some money and hang around? It's like, are you actually solving a real problem that people are
Exactly.
willing to pay for? And that thing of like getting signups, it's so easy to kind of create a bit of hype, right? You just product hunt, and there's lots of other founders that are all really keen to support each other, which is amazing. But then it's like,
then you have a wait list of like other founders who need
Yeah.
to do with your
yeah.
if you went to an incubator or somewhere and everybody signed up to wait list, but none of them is your actual ICP.
Yeah, so it's really fascinating. Your
Exactly.
advice is like bootstrap, really. Get, that being your goal, get some revenue coming in, like prove that what you're doing has legs, really.
And
Yes, it's like customers needs to, whether it is actually needed, whether it's actually solving some sort of problem, and you can see it when the customers are engaging in some sort of way. It cannot be like in one said statement. There are many other ways we can track if there is a good traction in a company or not, but it's not specifically only based on like signups. Especially that's a vanity metrics, and that should be gone, I would say. That should be just completely gone.
and can I ask you something? There was some crazy stories, I think, even for some startups, backed by, huge VCs companies. And, so they would get a massive amount of funding, and then all of the traction that they would claim to have was found out to be completely not true, because the company itself would create fake users, fake subscriptions, and create fake traction or even activity on the platform. How do you guys, protect yourself from that?
That's a great question.
Oh yeah, that is actually there has been. You remember, I don't know if how far it went, but Reddit started this way. They literally, to build traction, they created fake accounts so that other people can see that there's an engagement going on their platform, and that's how they grew that way. But for them it worked. For them it worked in a way that they built some engagement on the platform and they grew it, and after that they might have raised funding. But as you're saying, it's part of a due diligence process that investors will thoroughly do it in a very later stage, when they are in talks with the company. I don't generally get into that in depth. I just like screen above and then just send it. So I think I would love to get to that part also once. It's like I'm still in a learning process, I would say, in the beginning part. But yeah, it's very difficult after when you go through multiple due diligence process to not see whether these are fake or not. And definitely there can be some cheating case. I mean they're always going some bizarre news, as like they get some funding and then the company disappears, or like you remember JP Morgan did acquired a company which was like completely fake, and they are going through a lawsuit. And the amount of money the founder got from JP Morgan when they acquired it, they are paying much more than to the founder's legal fees. So it's like, it's complete loss for the JP Morgan. It's like, this kind of thing definitely goes, even if in such a big enterprise, you can assume it can go, but it can be detected. I mean, there might be some ways, honestly.
So go on.
I also wanted to go back to another point that you said about the having a look at the specifics around the founder, and you said, like, are they an expert like in their field? And it would be interesting to just dive into that a little bit around, what differentiates a founder that's an expert in a field to somebody just kind of picking something up off the shelf to kind of see if they can do something
Yes.
with it, if you get what I'm getting at.
Yeah, no, absolutely. In fact, I was just watching a video. It was from the recent like Forbes 30 and the 30 summit in Ohio, and the founders were like pitching, and all the founders that were pitching were like so expert in their category. You can see, I mean, they were like, when they were introducing their product, they always introduce themselves, and when they introduce themselves, they always talk about like how come they worked in this field prior, and how did they build this kind of knowledge into that, and then turn into building something very different in the same industry. So, and these people who are really expert, you can spot them immediately. Why and how is like, they will always keep talking about small pieces of something that normal people would not even know or have knowledge about. So they're like so excited. They have like immense information from like taking things from like zero to, I'm talking, in this logistic thing. There was a guy that I was talking to, and he knew how majority of the company in around the world actually go and build the supply chain in the logistic. So what they were doing, and I was like, wow, I didn't even know these concept. Like, this is how they chain it, this is how they deliver it, how they pick the pin codes, how they take it from one place to the other. He was like so expert, and then he was building a infrastructure for this entire supply chain. So you can just imagine, if you are a really knowledgeable or expert in your field, you will definitely make a very big difference. And when it comes to building of something in that same field, you can outperform people who are not an expert in the same field. So.
I absolutely love that. I'm so excited by that, because I think that that's when like really exciting technology kind of comes from, is like really deep like industry or sector knowledge, because that's what great technology is like overcoming a real world problem, and you can't really solve that problem if you don't really get that sector
idea of like everything. Yeah, exactly. And that's how crazy it is. Like, if you really know your grounds, you can, and you have like strong grasp on it, you can actually build the best thing and get funding if you want, or you can just absolutely bootstrap it and then just keep going.
Yeah.
One thing, so we were covering with you what you're looking at when you're picking the right companies to kind of look into. So one thing we said, obviously being an expert in the field. Then you mentioned also initial traction. Is there anything else that you're looking at when you sort of picking the companies you want to investigate with your detective senses?
It's kind of like, these are the two main things I would say, and definitely how much they're raising, because it's always put my ears up. If you're raising, how much you're raising, why you are raising that much. If it's just to fund, a lot of people just come and they're asking for like $1 million, and what they will do with that funding is to create an entire marketing campaigns, or like give it to the influencers, all investing on the marketing side. But this, it just doesn't work that way. You have to invest a lot of part. the entire goal of fundraising has to be a milestone. You have to set a goal, like why are you raising and how will you reach to your next milestone with that funding. So the milestone can be like, we want to add this specific feature, or this we want to add a new sector into our product. And how will you reach to that side? It cannot be just done through marketing. You will make your product, specialize in the product, or make it more better, user friendly, and invest a lot of amount in product building side, which can also include like hiring and any sort of extra vendor activities. So it's not just in one particular sector. You have to describe how you will use the amount of money you are asking for and where you will utilize it.
Very, very interesting. That makes sense. So would you say you would not look at people who just want money for marketing purposes?
It's not just one sector. Like, I do hear a lot that they want to raise for marketing, investing in the marketing activities, but yeah, I would not just go for that round.
Okay. And do you look at all at product market fit?
Okay. Yeah, majority of the company that come, they don't are not the product market fit. They are looking to, somehow to reach to that part, and that's why they're asking for sometimes such an insane prices. But if I would say pre-seed companies, they are very early stage. They are still trying to figure out. They do have the good ICPs, but they are still like getting into the waters, testing it. Are they fitting to the product market fit or not? But they are always in the edge. Like, if they get funding, they reach to the PMF quickly, or that they are able to figure out, or they will just pivot it. But no, like in pre-seed, majority of them are not like PMF reached yet.
And what percentage would you say are interested in using like the first lot of funding to work on the product, like actually improve the kind of experience? You said one of them.
Very few. Very few percent. I would say like 20 to 25%.
Okay.
I mean, that's kind of companies I'm getting in.
Yeah.
Getting maybe I'm targeting to the wrong audience. Maybe I'm getting from the wrong sources, but this is what I'm seeing.
And then, sorry.
No, go on.
I had another one. So these founders come to you, you give them some feedback. Like,
Yeah.
what happens after that? Is there like, do they take on board that feedback and go, oh yeah, you know what, you're right. We need to work on our attraction and get more people in? Or do they just go, okay, well, that CV wasn't right for us, on to the next one, and they just continue on this like treadmill for we must get funding?
I know. So I initially, when I started giving like a little bit of feedback on our first call or pitch deck, I used to be very, like soft and very making sure that the founder doesn't feel bad. But as I am getting used to this thing, I'm becoming more, like, I would not say straight to the point, but I do make my sentences very critic. So I make sure that they don't hurt, but they should be able to see that what right side is. Uh, and 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 I still feel when I'm on a call and I can sense it that they're not liking it. But what can I do? I mean, I have to give you a good feedback, so that, because if they're doing it, presenting themselves in a good way, it's not only going to help me, and it's going to help them much more. If they don't get funding through me, they will be able to go and ask from another investor to invest in them. So I just make sure that they get it. They get the sense of what they are missing and what to expect from the investors. I try to be nice as much as I can, but if there are so many calls happening, you can sometimes lose your control.
What have you? Can you recall the most ridiculous startup or example that didn't make sense at all, and people were going for millions and millions?
Uh, it was like, I would say weeks ago. There was one. It turned into a very a rude call, honestly. Very, very rude call. They were asking for like 6 million pre-seed and somewhere around 20 million valuation. And I was asking them, so they were like first time founder. So I was like, okay, they can make a mistake. And then I asked them, how did they came up to this valuation? And they were like, we were looking in the competitors, like how industry are actually going. They will get this much funding. So I was like, okay, this doesn't work like that. I was like in my head, I was like, no, this is not the way it goes. And they were like, keep talking. Like this is what they think. They believe that their product is so much, because founders love their idea so much. They think they are the only ones who are building it on not a bad sense, but it's a good thing to assume that you are building something valuable, but it has to show in the reality. You're building something for the 9 to 10 months, and you still don't have a good traction, and you are asking for $6 million for and they were asking for a good amount though. Sorry, for the good thing. And they wanted to hire some more engineers and researchers on their team. So that made a little bit more sense that they were want to implement more in their product, but they were not thinking of like how to generate revenue out of it, which was, if you don't make that sense, then it's not going to move forward. So at the end, when I was like telling them, this is not how it will go. Okay, this is what investors are going to expect you to show up as, and you should be giving them this 1, 2, 3, 4, 5 points. And they ended up I can sense it. Their faces dropped, and they were like, okay, we will definitely see who like reach out to the investor ourselves and figure things out on our own. And the call just ended. It was nothing. It was no. Even you have a courtesy to just be like nice and then end it, but it was just like it ended in the out of nowhere. So I was like, okay, you good to go. I mean, what can I do now?
Do you get do you see like a return from those people that you've sort of provided feedback on? Do they come back and go, is there any sort of success stories where people have gone, oh, you know what, right, and then they go back, reflect, and actually act on the things that you
Yeah.
point out, and then come back to you, and then you're able to take them on?
Yeah, I mean, there are a few actually. They did good, and in fact,
What makes
talking to
them
these
like different, those people?
they are open to the feedbacks, I would say, and they're always looking for ways to improve their presentation or themselves, just to make sure that they don't miss out anything out in the market. And especially, these people will go to investors, they will reach out themselves, and they'll present themselves, but they won't get any response. So they go through maybe some other scouts or some other platforms or something like that. And what they really want is the feedback, like what they are missing, that they're not getting reply or response from the investors. So if I give them something like that and they improve it, they actually improve the pitch decks they are working on, and then they send it to me with updated, and then I'm like, wow, they literally took some time to do more getting deep into the information I gave it to them. So I would love to like push more and keep like connecting with more investors for them if that would be necessary, because you can see that they are interested, that they will go a little bit more further just to prove themselves that they are doing it, they're going to make it. So there are founders that they actually do good, but then there's a very tiny percentage of people who just like, okay, reject you completely.
But that's why you're in quite a cool position where you're like in between the VCs and the money, so you're actually quite a cool sort of in between to help like nurture and coach those people through. So it's obviously must be quite rewarding for you and people actually listen.
Yeah, I mean, for a learning perspective, it's so good because I get to see so many pitch decks, and I actually get to see what things are missing and why it's missing. Because when I was raising for my own startup, nobody was there for me. I mean, I was just going through and talking to investors every time, just getting no, and I didn't know the reason why I was getting no. So now when I go through the entire process of like how investors are investing, I see like where my downfalls or like my drawbacks were. So it's just so cool to do this part.
That's really cool. So you actually have that sort of first-hand experience yourself as a founder. What, like, can you give us a little rundown on what happened there, if you don't mind, just out of interest?
Oh, it was like my first startup was like it's like a few years ago. I would say 2019. I would say that around that time. And I had no knowledge about anything, any investors. I was just like creating a very simple pitch and then sending it to almost every possible investor that I find, and only to get no response or a no. So it was like it just broke my spirit completely, and I was running out of funds, so I had to shut it down. But I would say it was a great experience to keep on, because I think for 2 months straight spend like more than 250 researching 250 investors and sending to like 65 to 67 investors my pitch, and each time it was an improve, but I because I was not getting some sort of feedback on how it was going. It was I think there was some sort of missing piece, but now when I look back, what was missing was actually my entire product. I was not able to create a customer story, just like how the first time founders do, make a mistake of targeting all sort of customers and having multiple ICPs. I was doing the same. So, customers are the key. That's for any product, whatever you're building. If it's not solving their problem, they're not going to pay. And if they're not going to pay, how are you going to build? So these are the key things that I actually got to understand now when I was, either working with these startups that I worked with, or in being in the venture capital. So yeah,
Cool, I love
this is
that.
how it is.
Yeah, it gives you a really like nice gift, that experience, because you have a understanding of what it's like to be on the other side.
Yeah, that's what I would say. That's the reason why it's so easy for me now to reach out to investors and then get a follow up from them that okay, they are willing to work with me, mainly because I know both ends now, and I can actually understand from the founder's perspective and the investor perspective. So just like a great bridge that I can create for them. So it's so cool. It's definitely.
Love that.
Nice. Couple of more questions before we use all of your time available. Is it important for the co-founders to have a good chemistry? So when somebody sends you a deck and you get on the call, is it important to kind of to see them being aligned?
So yeah, absolutely. The first time I talked to the founders, it's just one usually that I talk to, and if I really like and I send it to investor, they bring all. The first thing they do is they bring on all the team members, and they'd have to know like how did you meet them, how did you find them, because at the end of the day, if you don't have a great team, and there's like hiccups in between, and they get funding, it's going to be big drawback for the investors to see the entire team is breaking up, and they're not seeing any progress in the between. So it's so important to have a good team to invest in the early on, and majority of the companies do have like a co-founder, and they usually meet at the. I was also looking for recently. I was also looking because I was building another company, and I was looking for a co-founder, and I was trying to like reach out to. There's a YC matching co-founder platform, so I found few from there, but it just doesn't work. And if you don't know the person from a very early on, or like somewhere in between, you don't build the chemistry, it's hard to it's like you're living in the same house and you are not supposed to leave. You're like married. It's like a marriage only. And when you break up, it's a kind of a divorce. So it's absolutely like that. You cannot have like a bad team or a bad co-founder and building a great product. So invest in a good co-founder.
Yeah, makes sense. If you could tell every rejected founder one truth that would actually hurt their feelings, but could really help them, what would that be?
Oh my God. Uh, you cannot have multiple customers in your early stage product. You believe, if you think that you have like this customer, this customer, this customer, it's not. You have to find the first one which pays, which stays longer, and which will actually help you build your entire tool. Invest in them, prioritize them, listen to them. You might feel like, okay, this other customer is from a different ICP, is looking for a specific feature or asking for something else. You cannot divert, you cannot lose your focus. You have to stick to a particular ICP unless you actually win that entire market segment, and build a solid tool for them so that they keep coming back and there's less churn rate. So I would say just focus on the right customer segment in the beginning, and almost every company you will see, they are like, okay, we're also providing it for the B2B, we're also doing for B2C. So they are like, they want to spread as much thin as possible, assuming that it's going to help them grow very quickly and get much more funding, because they are like actually winning the market, fast. But that's not true. That doesn't work that way.
Any tips on like how to do that? To find, like, how do you
narrow down?
Yeah, narrow down and select that particular
ICP.
Yeah.
So there's this is what I used to do. In between, when I was switching the careers or like figuring things out, what am I supposed to do? I did this part of creating, helping companies define their ICP. So you can actually see which customers are engaging. You can create 3 or 4 pillars into it. This is a segment, and you will create in a story format, like who they are, how they work, or why they need your product, and which features on the product they are using. So you can have like 4 different pillars of different ICPs. You can get something like 3 to 4. It's normal if you are just a very early company, and or else you have a very specific idea for a specific group of people. So you're already very defined to your ICP. But if you don't have, and you have a huge umbrella, have like a 3 to 4 ICPs, and then pay attention to the ones that are that need your product right now, that pays, and that are highly engaging with your tool, especially which features are they using if it's like a SaaS product. So it can give you a good information on which customer segment or ICP to target. It can take a very long period of time, but you will actually figure out which one to focus on the early stage.
Love that.
Great. Last question for you, believe it or not, but what is your honest prediction for the tech space for 2030? Like, do you think everything is going to be AI? There's no space for anything new? What do you think is going to happen?
Oh my God. If my prediction come true, I would need everything to be very organized, definitely with the help of AI. But I don't know. I mean, where heavy investments are going to AI, or robots, or deep tech things. I would want something to be able to solve the problem, or my daily basis problem, because if on a regular basis I have like so much work to do, and then if I don't spend my time on my personal life, then I'm all about work. So I want something to be able to manage my work and a little bit of my life together, or like have like some organized way which I can like think clearly and work more efficiently. So I would like to invest more in such companies. And I do believe as we are moving forward and so fast and so quickly things are changing, we would need, some sort of companies or like heavy investment going on in making the life very easy or like sophisticated, something like that. So I do believe that AI is doing that, but not a lot of companies. You see there's so many companies coming out in AI, and they are building different tools. But the problem is, you spend a few time on them and then you just leave. And then on the other day, you will see that the company shuts down. So it's just like it comes and gives you a test of like, okay, wow, we can make the life easy, and then they just disappear. So we need something like formative or like to the structured point. So I'm hoping that I do see companies coming in that sector more.
So you're looking for a robot doing your washing? What?
Oh, there is actually there's so many crazy things. And when I was in San Francisco, I did saw all these things happening. So like Tesla created its robot to do their household things, and if I have that, I would definitely let it do my stuff. Half of my stuff be done by a robot. So yeah, why not? I mean,
Cool. Well, before we say goodbye, if any founders listening to this episode would like to get in touch with you and show you their pitch deck, how can they do that?
oh, LinkedIn. Best place is LinkedIn. Oh, and LinkedIn is so. Sometimes it just gives me, tug of war things. Like I hate LinkedIn so much sometimes because it just leaves. It just don't give me the impression. Like if I'm not active every day, why do you take away all my impressions? Why do you take away my reach? It's like that. But I do want to spend less time, still have a good amount of engagement coming in, but LinkedIn is LinkedIn. It just do whatever the hell it wants to do. So you can still reach out to me through LinkedIn. It's the easiest and quickest way. I will definitely respond and connect.
Yeah, for a social media like networking platform, it's surprisingly clumsy and not very good for you kind of like harnessing your network of people that have like openly accepted and connected with you. We found it like to be incredibly clunky and buggy, and even paying for like Sales Navigator.
So we just
Oh, you've got a
determined.
great story. You should tell that.
I'm not going to go into that right now, but so we determined that probably LinkedIn is not going to be a sponsor of this podcast right now.
Definitely not.
Awesome. Well, we'll put some links to your profile in this podcast, and obviously when we share in social media. In the meantime, I wanted to say a huge thank you for joining us today. It was extremely useful and eye-opening.
Yeah, lovely,
Oh,
lovely chatting to you. Really appreciate your energy and time, and yeah, it's been great.
thanks for having me. It was so fun to talk to you guys. And it's like having a good conversation is so rare, but when you find and it just kicks in.
Yeah, I'm sure we'll have more conversations about this.